Hi everybody, and welcome back to Fang Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. If you saw me on BNN on Monday, thank you for tuning in. It was one of the more enjoyable sessions, and I was glad to be able to talk stocks with my favorite host on BNN, Andy Bell. For the new viewers, welcome. We are happy to have you, and even though I will be back on BNN in June, if you want updated commentary on the Fang stocks, just hit that subscribe button and join us each week. We'd love to have you on board. As I noted here last Friday and on BNN the past Monday, the stock market, as exemplified by the S&P 500, is almost perfectly right at a key breakpoint. Its super growth price, or 3.5 times book. It is therefore either getting ready to break out or is at an intermediate top. The Canadian market, as exemplified by the TSX, may already have broken out very slightly or is extremely close to doing so. But to actually do so, if history is any guide, it will need the Standard & Poor's 500 to confirm the breakout. I also need to see the supporting balance sheets to seal the deal, as it were. But those are coming in now, so I don't need to be pedantic about this point right now. I would reiterate that the fair market values in the TSX are strong and positive, and the index is very cheap compared to that of the US. The TSX is trading at 1.5 times book. The Standard & Poor's is trading at 3.5 times book. And the NASDAQ 100 is trading at 6.9 times book. So you can judge your risks accordingly. Anyway, if you want some tension in your life, this is one of those perfect fill or kill times in the market. And I have to say that I do not have the faintest idea of which way things will go. If we bust out, there should be good, pretty much across the board upside potential, especially in the Canadian market. And one would want to be well invested. If the markets fail to break out, you would want to be defensively structured. Anyway, today we will take a close look at the Fangs to see if they are trying to give us any kind of a clue. There are 3 things that I should draw your attention to. First, we're getting there, but I do want to see what the first quarter has brought. And that information is either here or almost upon us. Second, I need to see the balance sheets, not only the Fangs, but also of the broader market to verify the precision of the current SVA breakpoints. And third, of course, well, we all want to know what the boys are doing. If you want to learn more about how we go about conducting our analysis and our proprietary set of valuation tools, just send us an email at info@strategicanalysis.ca telling us about your investment journey, and we will see if we are the right fit for your investment needs. We'd love to hear from you. But before we take a closer look at the Fangs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. We're almost at 2,000 subscribers, so it would be great if you could help us get over that milestone. Okay, turning to the Fangs themselves, we're going to start off with Meta, which has been a good strong buy ever since it broke out over its mid-growth price. That's 2.5 times book. And it is closing in on its low super growth price. Now I really want to see what this quarter has brought, because I want to see whether that fair market value trend upwards now has actually been confirmed by what's going on in the past quarter. Apple, as you, well, you know Apple, the problem here, eh? We've got to get that first quarter balance sheet in to find out what has actually happened to the structural prices. Have they continued to buy back stock as I read, and therefore those fair market value trends may be trending lower, not higher? Well, we've got to see. NVIDIA, very interesting structure here, eh? First of all, the company came up to its HB5 price and it sort of tried to get through, and then it did break out, and now it's sitting on its HB5 and it's trying to hold there. If that continues to be the case, we may well see that this stock could head to its HB6 price, which is a all-time high for the stock, going all the way back to 2000. Amazon has well, it's been sort of backing and filling here ever since our sell on the stock at its bubble price. We never got a buy again for the stock, and it's been kind of oozing a little bit higher. It was a little bit stronger today. They've won their antitrust case, so that may help them get back to the bubble price. I don't know whether it's possible for this stock to get out, but I do know that I'd like to see that first quarter, because I'd like to see if this downtrending fair market value trend that we see is going to persist or maybe turn back up again, which might then give some confidence to investors in the stock again. Alphabet continues to dither on either side of its low super growth price. As I showed last week, you know, the super growth price itself, okay, has been a 10-year, a long-term low for the company. And I'm not surprised that the company is dithering here, because the market itself may be wondering whether it needs to go back down to its old lows or hold up in here. My suspicion is that, yeah, we're going to see the super growth price again. Microsoft, the same thing, dithering either side of its HB1 price. You know, as I say about stocks that trade either side of a break point, that's indecisive or sloppy trading, and it typically leads to lower prices ahead. Netflix, well, Netflix had an interesting week. And I don't know whether you might have noticed or not, but you know that that the day that Netflix announced its results, and with some management commentary, the stock actually traded right down dead to its mid super growth price in the after hours, but then closed back up again a little bit. It's been sloping down ever since. Management has tried to put a good spin on things, but so far the market looks a little skeptical, doesn't it? Finally, Tesla, talk about indecisive trading. Well, Tesla had been trading either side of its HB2 price. It traded above, actually gave us a sell signal, gave us a buy signal, gave us a sell signal. Well, third time unlucky, and the stock has now been streaming down. I would typically expect, after a period of indecisive trading, that a one breakpoint down move would probably not be enough for us to see a bottom on this stock. But we'll see when it gets to its HB1. Now, to sum things up, as I asked last week, have our Fangs given us one iota of a clue as to what to expect going forward from here? Answer is still nope. As a group, I would call the trading in the Fangs as indecisive. 3 of them are in their buy hold camp. 3 are irresolute, and 2 are sells. First, the buy-hold camp. First and foremost, of course, is Meta, which continues to trade confidently above its super growth price, 3.5 times book, and our buy signal remains solidly intact. But I really want to see the latest quarter numbers to make sure that things are on track for that hoped for rebound in the earnings and the fair market value trend. Second, NVIDIA has been sitting on its HB5 price. That's 26 times book for the past 4 weeks, where it has been holding nicely and could be heading back to its HB6 or 33 times book, which would be back to its 23-year all-time high. But we need to watch closely to see that it can hold here. Allow me to make an important observation. Whenever I see a stock hug with precision a breakpoint and manage to hold tightly without any false move lower, even momentarily, that usually means that any penetration of the breakpoint is a genuine breakpoint, and there may be no looking back. So keep this in mind for NVIDIA at present. As for Apple, as usual, I still really want to see their new balance sheet. I know that the company has been quite active in buying back stock this past quarter. Perhaps that guesstimated HB6 price, that's 33 times book value, will prove to be support, but there is no rush to make any hard decisions right here and now. So I will continue to put it down as a hold and wait and see. Amazon won its antitrust suit and is continuing its slow rally back to its bubble price. But if history tells me anything, it should find a ceiling there, if it can get that high, and then continue to slip back to its mid-super growth price, its very long-term low. The question which I am very curious about is that miserable earnings fair market value trend for real, in which case a lot of caution is required here? Or will all those layoffs be a harbinger of a rebound of its earnings and reinvigorate the stock? This immediate past quarter may tell us a lot, and we won't have long to wait. Alphabet and Microsoft have continued to dither on either side of the recent breakpoints for some time, which I call indecisive or sloppy trading. While both have broken to the upside, both have been a tiny bit toppy very lately. However, this current quarter may help provide some resolution as to which direction both shares should ultimately take. Now, Netflix had an interesting week. You can't see it on our SVA chart, but in the after hours immediately following its first quarter earnings announcement, the shares plummeted right down to their MSG price. That's 5.5 times book, then rallied and actually closed a snick higher before continuing to ooze back down again towards that mid-super growth price ever since. Management had been negative as far as the first quarter was concerned, but has now put a better spin on the outlook, although it is apparent that the market is not entirely buying their story. I will maintain my sell rating on the stock and see what happens when the shares get back to their mid-super growth price low, which I fully expect. Looking at Tesla, 6 weeks ago, we saw that Tesla had a technical breakdown below its HB2 or 12 times book, held long enough to give me a confirmed breakdown using our 3% 5-day rule. Then the minute it gave that signal, it broke out again and promptly gave us a confirmed buy signal before once again breaking down. Talk about indecisive trading. Well, a week ago Wednesday, the stock gave us another sell, and this one was for real, it appears. Well, you remember what kind of market action this is, don't you? I call it sloppy or indecisive trading. It usually leads to lower prices ahead, and that is what we are now seeing finally from this stock. My only question is, can that level hold? That is this HB1 price, or 9.5 times book. And my initial concerns would be that a one breakpoint correction after all that sloppy trading would typically not be enough to correct that indecisiveness. And I myself do anticipate that a retracement to the bubble price will very likely ensue. I'll finish off by reminding you that unless or until the Standard & Poor's is actually able to break out over its super growth price, 3.5 times book, which is very near at hand, I would treat any exposure to the NASDAQ stocks with considerable caution. The NASDAQ 100 itself has a fair way to go before it could render a buy signal. So I have to repeat that for this index, what we are seeing is a rally only. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at Nickel & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week on Friday.